Hello, hello, hello. This is Stephanie with Simple Realty, and today we're just going to talk simple real estate to hopefully increase your knowledge base, because you don't know what you've not been told. Since you're already watching, I know you know what to do with those like and subscribe buttons down below, so let's go. Today I'm going to continue with my mini-series called Are You Financially Ready to Buy a Home? We've already discussed your budget, your credit score, and today we're going to move right into mortgage pre-qualification, pre-approval for a loan, and your payments. Let's pretend that you've already chosen a lender and you've already had that first conversation or meeting. Your lender runs some preliminary numbers and they say that on the surface, everything looks good. So at this time, you're at the pre-qualified stage, which means that you've given the lender your income details, financial commitments, and they estimated what you basically can afford. The next step is your lender is going to pull your credit score. Nope, they're not going to go by the one you tell them. Remember in video 1 when I told you about all that documentation you're going to need to gather? Well, your lender is now going to review it, analyze it, crunch some numbers, and tell you how much they will consider lending you and the associated terms. We're going to get a little technical here, so let's slow down and listen carefully. You can always come back to this point and rewatch. Your lender is going to be looking at your debt to income ratios, and the two magic numbers I want you to hear are 28 and 36%. Let me explain. There are two debt ratios that are going to be looked at: front-end ratio and back-end ratio. Each of these calculates how much of your gross income can go towards your mortgage, aka housing expense, or mortgage plus other debt. Front-end ratio is the easier of the two to determine. This is the ratio of the percent of your yearly gross income dedicated to paying the mortgage each month, and this includes principal, interest, taxes, homeowner's insurance, and maybe PMI. Your front-end ratio generally should not exceed 28% of your gross income. Yes, some lenders will let you go higher, but you don't want to be overburdened and house poor. Back-end ratio is similar to front-end, but it takes into consideration all your debts, not just your mortgage. And this is the one that lenders look at most. Think about those payments where you owe someone money on a monthly basis. The ones that you get a bill for, credit card, auto payments, child support, and so forth. Here, the target number is 36%. Your total back-end ratio should not exceed 30% of your gross income. Yes, your debt income can go up to 43%, but shoot for that 28-36. Again, you don't want to be overburdened and house poor. And guys, on debt to income ratio, lower the better. To a lender, the higher the percent, the more likely you're going to default on your loan. Next, your lender will now be able to give you the loan amount that you qualify and the associated payments. This is going to be your loan estimate. Quick side note here. This is where a lot of buyers make their first mistake. Just because the lender tells you that you qualify for X amount of money, should you spend it? The reason? The lender does not take into consider any monies that does not hit your credit report. They don't look at your cost for food, cell phone, fund money, all the way down to your Hulu subscription. Hence the reason I had you take a hard look at your budget earlier on. These are your true costs, and the lender does not factor those in. Think of your pre-qualified like a credit card. Just because you have a limit of $20,000 doesn't mean you go out the next day and put $20,000 on it. Also, don't get worried about the debt. Most people don't go into homeownership debt-free, or at least none that I've met. But you do need to know, set, and stick to your limits. So if everything looks good, this is where your lender hands you that much sought after pre-approval letter, which your real estate agent will attach to your offer, and good luck on winning the bid. The next video in my mini-series called Are You Financially Ready to Buy a Home will be number 3, and it's on down payments. I hope that this builds on your real estate knowledge. If you want another video on another topic, shoot me a message down below and I'll help out where I can. Thanks for listening. Push all those positive buttons down below, or go find me on Instagram for more fun real estate stuff, or watch me under YouTube, Stephanie Gavric. So I appreciate your time. Thanks, and have a great day. Be well.